Good morning, folks. Welcome to Friday morning's edition of Ben in 10 at 10. Today I'm going to talk about money. I'm going to talk about financial services and what Andrew Bailey had to say yesterday in the Telegraph. He was published bemoaning the fact that the EU was refusing to recognise British financial institutions as having the equivalent level of regulations that EU ones do. And the reason he was bemoaning that was because in the absence of that recognition, it's impossible for the UK to sell its financial services in the EU. Now, you might have thought that with the huge trade deal that was championed and blasted all over the place last year, we might have included financial services, that we might have tackled the issue of equivalence in that deal. But we didn't include financial services in that deal. We included just about everything that the EU wanted of us, but our negotiators failed to put the interests of our financial services industry foremost in their negotiations. They trusted the EU to come back to the table after the trade deal had been signed to do a new trade deal on financial services. But we know that the EU can't be trusted. As I've said a million times, it has malign intent towards the UK. It has a mercantilist approach to trade. So when we signed the trade deal last year, when we opened up our markets to them and gave them unfettered access to sell their goods to the British public, bearing in mind that they sell us 300 billion euros worth of goods each year, you would have thought we might have considered our financial services industry. When we gave up rights to our fishing waters all the way down to the 6-mile limit and failed to secure rights for our fishermen to export their fish into the EU, you would have thought we might have thought about the financial services industry. When we allowed them to annex Northern Ireland, something they pursued relentlessly, you would have thought we might have thought about our financial services industry. When we signed up to net zero carbon emissions by 2050, you would have thought we might have secured something for our financial services industry. When we signed up even to commit 80 million a year to the European defence budget, you would have thought we might have secured our financial services industry. But we didn't. We trusted the EU. We made mistake after mistake in trusting the EU. We thought that because they offer up equivalent recognition to the US, Canada, Australia, Hong Kong, and even Brazil, that it would be a shoo-in for the UK to get recognition. And guess what? They're not recognising us as being equivalent. And it should not come as a surprise to Andrew Bailey or to Rishi Sunak. We've given away all our negotiating leverage. And to make matters worse, even before the trade deal was signed, Rishi Sunak unilaterally declared that EU financial services companies could operate in the UK as if they were still operating in a single market on financial services. He gave away the last bit of leverage we had. So why would the EU now be magnanimous in their victory? Their aim is to steal our financial services, and our Bank of England and the government and Rishi Sunak need to move fast to address it. And the way to do it is not by cowering in a corner, timid, fearful of the hook or straight right that the EU might chuck at us. The way to deal with it is to get up, stand up, be counted, and punch them right back on the nose. And it's easily done. Rishi Sunak needs to move away from that undertaking he gave to the EU. He needs to require all EU companies and financial services businesses operating in the UK to incorporate as companies, fully capitalised and fully subject to British financial regulatory authorities. We also need to roll back the ridiculous EU directive that forces our financial institutions to treat each EU member state as if it's zero risk. It's patently obvious that Greece is not a zero risk country when it comes to lending. It's patently obvious that Greece is more risky than Germany, but we treat them both as if they're zero risk. And what that means is that our financial services institutions are not putting aside capital for that risk. Our financial services institutions should be required to adequately recognise that risk, to make proper provisions. And the reason I say that is because the minute we make proper provisions, the cost of funding for the EU will go through the roof. If they won't recognise our financial institutions as being equivalent, we need to make sure, at the very least, that they pay a market price for loans from British companies and British banks. That's the second thing he has to do. But the third thing, and the most important thing that the Bank of England and Rishi Sunak need to do, is deregulate our financial services industry. The EU loves regulation. Let them indulge in that love affair. Let them regulate their own institutions to hell. But for goodness sake, we're already suffering greatly as a result of the pandemic. Our institutions need to be set free. Deregulate. Take the fight to the EU. Make our financial services industry fighting fit. Don't live with all the EU regulations that have been foisted on them over decades. Release them from that straitjacket. And let me tell you, if we do all of that, the EU will come back with their begging bowl, wanting us to trade with them, recognizing us as being equivalent, because they will see us as a threat. Ladies and gentlemen, the only way to secure our interests, and it's always been the case, is for us to take the fight to the EU. We must make them recognize the economic and competitive threat that an independent, nimble, deregulated United Kingdom would be. It's easily done, and our politicians and our governing structures need to wake up to it.